Something massive just happened behind the scenes, and almost no one is talking about it the way they should. China has dramatically reduced its US debt holdings, and this move could change the financial game faster than most people expect. At first glance, it sounds technical and boring, but once you understand what this really means, it becomes deeply unsettling. Because when the largest foreign holder of US debt steps back, it's not an accident, it's a message. This isn't a normal portfolio adjustment. This is a strategic shift with long-term consequences. China has been quietly selling US Treasuries for years, but this latest move crossed a psychological line. The scale and timing are what matter most. When a country unloads debt, it's voting with capital. And China's vote is loud. Before we go deeper, if you want real financial signals explained clearly without noise, like this video and subscribe to Bullion Alert HQ. Staying informed early matters more than ever right now. US debt has always relied on foreign buyers. When demand weakens, stress builds under the surface. Treasuries are supposed to be the safest asset in the world, but safety depends on trust. China selling US debt raises an uncomfortable question. Who will step in to replace that demand? If buyers disappear, yields rise, and when yields rise, borrowing gets expensive fast. Higher yields don't just affect Wall Street. They hit mortgages, credit cards, car loans, and government spending. This is why this move matters to everyday Americans. Debt doesn't stay contained. What most headlines won't explain is motivation. China isn't selling because it needs cash. This is about leverage, control, and risk reduction. It's about preparing for a different future. China understands something critical. Holding massive amounts of US debt ties their fate to US stability. Reducing exposure gives flexibility, and flexibility is power. Another detail that's being glossed over is where that money may be going. Capital never disappears. It moves. When countries reduce dollar exposure, they often rotate into hard assets. Gold has historically been a favorite. This lines up with what we've already seen. Central banks have been buying gold at record levels. China has been one of the most aggressive buyers. That's not coincidence. Selling US debt while accumulating gold sends a clear signal. Trust is shifting. The dollar has benefited from global confidence for decades. That confidence is now being quietly tested. If fewer countries want to hold US debt, the system becomes fragile. Fragility doesn't show until stress hits. And stress is already building. Rising deficits, political tension, and global instability all feed into this. The US must issue more debt just to function. That means finding buyers becomes more urgent every year. If foreign buyers step away, domestic buyers must absorb the load. That usually means higher interest rates. Higher rates slow economies. Slow economies create political pressure. This is where things start to spiral. Debt feeds instability, and instability feeds more debt. China's move accelerates this cycle, whether intentional or not. The effect is real. Some analysts argue this is overblown. They say markets can absorb this shift. But history shows that confidence breaks suddenly, not gradually. By the time it's obvious, it's too late. Another angle few discuss is geopolitics. Debt is not just financial, it's strategic. By reducing US debt exposure, China reduces vulnerability to sanctions and financial pressure. That's a defensive move. It also weakens one of America's key advantages. Financial dominance relies on participation. Less participation means less control. And control is everything in global finance. This doesn't mean collapse tomorrow, but it does mean change is accelerating. Gold, silver, and hard assets tend to respond early to these shifts. They sense instability before currencies do. That's why precious metals demand has been rising. Quietly, it's not hype, it's positioning. At Bullion Alert HQ, the goal is to read signals. not chase fear. And this signal is impossible to ignore. China selling US debt is not the end by itself, but it may be the beginning of something much bigger. The real danger is not what's announced, it's what's normalized. Once markets accept that major buyers are leaving, behavior changes permanently. Confidence doesn't snap back easily, and we're not done yet. Because what China may be doing next matters even more than what it just sold. Stay with me. Because part 2 connects US debt, the dollar, gold, and why this shift could shock markets far sooner than expected. What makes this moment dangerous isn't just that China sold US debt. It's that they may not come back. Other players start asking uncomfortable questions. If China doesn't need US Treasuries, who does? Higher yields sound good until you realize what they actually mean. If foreign demand continues to fade, the Federal Reserve becomes the buyer of last resort, and that opens another door. This is where many investors get caught off guard. They expect announcements, not slow motion shifts. The real move happens before the headlines catch up. At Bullion Alert HQ, we watch these transitions carefully. But it clearly marks a turning point. What happens next depends on how many others follow and how fast trust shifts. Now, I want your take. Do you think China's move will force higher yields or accelerate a shift toward gold? Drop your thoughts in the comments below and let's break it down together. Different perspectives matter right now. If this analysis helped you see the bigger picture, share this video with someone watching the dollar, gold, or bonds. These are conversations worth having early. Thanks for watching Bullion Alert HQ. Stay informed, stay calm, and I'll see you in the next one.